With inflation continuing to rise in Nigeria, the right portfolio mix that maintains purchasing power is sought after by investors. Are foreign securities the proper strategy? Should you include FX assets in your portfolio? Cash, equities, fixed income? Look at what the dollar was a year ago and where it is today. We're going to have a whole lot of questions that we'll be throwing to our special guest, Dr. Kunle Alonge, PhD Development Finance. He's also the CEO of Sonora Capital and Investment Limited. Dr. Kunle, you're very welcome. Good morning to you.
Good morning, Rotis. Thank you for having me.
Thanks for being here. So, a lot to discuss. What do you think about a mix of foreign exchange assets in a portfolio to, I guess, diversify things?
What I would say, first and foremost, is, we used to be in an era where all that we have to worry about in terms of purchasing power was inflation rate. But today, it's like a triple whammy. Every business has to worry about inflation rate today, interest rates, and of course forex risk.
Yeah.
So it's like a triple whammy. As a developmental finance person, should I be telling people to hold dollar in their portfolio? But honestly,
Doctor, that's the reality.
That's the reality today. So I have to say that, in addition to having stocks and having bonds and having a mix of all those securities, it's also advisable to hold on to forex asset today in order to mitigate against those foreign exchange risk.
We were supposed to get an update from the federal government of Nigeria. This has been spearheaded by Wale Edu, Minister of Finance and Coordinating Minister of the Economy, about these dollar bonds that they were going to issue to get diaspora investment, also get folks in Nigeria, the indigents here, to bring out money from their domiciliary accounts. The IMF has warned that could put pressure on the exchange rate. Everybody's been giving their opinions. What's your thoughts on that? Local dollar.
Well, the whole essence of trying to do that is to move money from static positions, which is what I would call the funds we have in domiciliary accounts. And I think as of December last year, that figure was about $30 billion.
Right.
Yeah. So they want to move that into the active sector, and that's why they want to raise this bond. While it's a very good initiative, but we also have to worry about debt servicing costs.
Right.
Because today, I think I saw the statistics put up by one of your previous interviewees. That our debt servicing to revenue today is about 8x or 9x. So that's something we also have to worry about if we issue those bonds. But it's a good initiative. They said it was going to come out in June, but it doesn't come out yet. So we are hoping at least going to help push money from static situation in domiciliary accounts to active sector. Yeah,
I think that you're talking about Esilia Aigbe, the economist and director of SCAP Management.
Yes.
He's one of my favorite guests that come on the program. The Naira closing at 1,576 yesterday on the official window.
Correct.
You've seen, obviously, you're in the FX space. We were at 1,800, came down to 1,001, we're back up to 1,500. Are you in the camp that feels the Naira is still finding its value? Where do you see it?
Sincerely, I'm actually of the belief that our value of Naira should actually be between 1,000 to 1,200.
Okay.
But every asset would always be looking for value or finding its value based on fundamentals. Now, what are our fundamentals? How are we managing our economy today? I would only say we should be around 1,000 to 1,200 if we're able to do the things that we're expected to do, which is maintaining supply in that market. But in a situation whereby the federal government or the central bank intervened on Monday, I think, $123 million, I doubt if that is enough to move the needle. I don't think it's enough to move the needle. But however, if you can keep the supply steady and we can then the Naira actually can find its value. But until then, it's going to keep going up and down.
Yeah. The front page of this day newspaper, Nigeria's newspaper of record, talks about oil theft and the whole, issues around that.
Okay.
The oil output, as far as defending the currency, increasing FX flows, should that be the main focus or additional channels? Well,
unfortunately, that's the main focus today.
Yeah.
However, we have some low-hanging fruits.
Okay.
For me, agriculture is one. I have many clients today that are into exports.
Okay.
Commodity exports. Can we increase our productivity in that area? Oh, very much so. You know, today we have food crisis. There's a lot of reason why we should actually put more focus on agriculture today.
Yeah.
We have food crisis, which is affecting, I mean, headline inflation at 34%, food inflation at 40%. That should be a cause of concern for anyone, right? So we have a lot of motivation to want to go into agriculture today, not just for FX income, but also to tackle some of these problems that we are facing. So yeah, and I see agriculture as that space where we can make some quick gains in improving our FX supply.
So you mentioned clients, some of them being in your in the export side. Well, how does the FX situation affect the Sonora business model?
So Sonora Capital today is we are a financial advisory company. We help companies to meet their trade finance needs.
Okay.
So we don't really take position in dollars or in forex.
Yeah.
You know, and so whether the rate is going up or down is none of our business. It's none of our business per se. However, just like every other business, we thrive on volume. We thrive on commerce. So when commerce is going up, it affects our business. When commerce is going down, it affects our business negatively. So yes, when rate is so high as they are today, it closed at 1,577 yesterday, as you pointed out, and the black market as of yesterday was about 1,580, 590. You know, so people can't buy, you know, at those rates. So it reduces the volume of transactions that are out there. So yes, it affects us. I wanted to ask you about forex trading, and I guess when things get tight in an economy, people start, you know, gambling a bit or looking to how to make money and stuff like that. What's your advice for anyone who wants to get into forex trading using currency pairs? Okay, currency pair is. I would just tell people to look before they leap.
Yeah.
The reason is because trading on currency pairs is like betting.
Right.
You know, like you're betting that Real Madrid is going to win versus Man U, you know?
Right.
So you must know the actions that Man U's have taken that would impact their efficiency on the field, and as opposed to what the actions that Real Madrid has taken. So when you're dealing on currency pairs, for instance, dollar and rand, you must know what policies are in place in South Africa that's going to move the needle of rand against the dollar. And you must know what policies are there in the US that is going to move the needle the other way around. You understand? So here, it is a place whereby people need to really fully understand the fundamentals of those countries in which they are trading their currency. So it's not as easy as it is being generally advertised.
It's risky.
It's very, very risky. Yeah. It's like you are doing bets.
Right.
You know, so very risky. And people should just take a second look before they dive into it.
For us here, is the coast clear with respect to FX volatility, or is there what's on the horizon? I really want us to get into this
Can I say that no?
Yeah.
This year has been a disaster really for companies and people that have businesses that are FX dependent. The exporters, the importers alike. Why in February I think we're about 1,900 in February. Then we went as low as 1,050 around April.
Yeah.
And today we are back at 1,600 there, about plus or minus. You know, no business can survive with those level of volatility, regardless of what side of it you're playing. You know, for the exporter, they want it to be as high as possible. For the importers, they want it to be as low as possible. You know, but wherever you play, one thing that you want is an ability to plan ahead. And where you have those level of volatility, it's difficult to plan. And so am I going to say that I have seen enough policy statements coming out to where I will say the volatilities are out? No, the volatilities are still going to keep happening. So that's what I would say.
So how do you hedge against that? What's the...
For the importers, you want to hold dollar longer than necessary, or longer than you used to.
Yeah.
So you want to hold more dollar assets. For the exporters, you just hope that it's going to keep going up.
Yeah, yeah.
And, yeah.
As far as cost metrics for SMEs, what was the top three I was thinking of? Is it electricity, foreign exchange, and taxes? Yeah, are those the top three, or is it how would you put the top three metrics for cost
For me,
pressures for SMEs?
Cost pressure for SMEs, well, FX.
Yeah.
FX is top there. Wages, wages, because for us as a company today, in the last 2 years, we've had to increase salary like maybe 3 times, So,
wow.
yes, so wages, and then, of course, electricity, which, but those are fixed costs, right? So, and month in, month out, you have to just find a way to bear those costs. But FX is really, really something that every company has to worry about.
Yeah. Now, as far as I have to draw you into the minimum wage negotiations that are going on, because as far as SMEs, you mentioned having to raise salaries. Now, how do you think the minimum wage conversation, whatever the outcome is, will impact the private sector and so on and so forth?
Well, I hope it's going to be high enough to move the level of commerce.
Yeah.
But at the same time, I hope it's going to not be too high to where it creates a lot of, it moves the needle on inflation as well.
Right.
Because what you don't want is, people get paid more, and then everything else is now responding to that in terms of inflation, in terms of general cost of doing business. So if you ask me, the 60,000 that the government is proposing, I think it should be between that figure and maybe 100,000.
Okay. Now, as far as the rest of this year is concerned, the second half, what's your outlook? The business environment, macroeconomic issues. How do you see things?
People should just tighten their seatbelts. I don't see any
upside,
any silver line out there yet.
Yeah.
So people should tighten their business. They should tighten their belt, continue to do what they've been doing. If you can hold dollar asset, hold dollar asset. If you can hedge with gold, hedge with gold. If you have the opportunity to hedge with gold, you can do that. Because that's an instrument that has performed historically.
Yeah.
So people should just continue to do what you can do.
Tighten your belts and fasten
the belts.
Dr. Kunle Alonge, CEO, Sonora Capital Investment Limited. Thank you so much for your time. Really
Thank you so much for having me.